Good morning, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Now, today is Wednesday, the 13th of November, and we're going to get the show started. The first thing I want to talk about is, there's two things that they really point to say we got a great, thriving economy out there. One is the jobs numbers. And, they've worked that. How they've worked it is Obamacare. Really? Obamacare. What happened is under the Obamacare, they came in and they said to employers, if you've got more than like 30 employees at your company, which is a lot of companies in the United States. You cross the United States, how many companies have more than 30 employees? A lot of companies. They said to them basically, if you've got more than 30 full-time employees working at your company, you're going to have to buy this full big health care. It's going to cost you a fortune. So these companies said, hey, you know what we can do? If our workers work for less than 30 hours a week, they're not counted as full-time workers. So they got rid of all the workers who work for 30 hours a week, and they offered them 30-hour-a-week jobs, which part-time. So they switched over from full-time jobs to part-time jobs so they wouldn't have to pay the big medical expenses, these companies. And by doing that, they created twice as many part-time jobs. Now, each one of those persons gets counted in the labor force as a full-time job. Even if you only work 1 hour a week, you get counted as a full-time job. The second thing they did to change the numbers so that the jobs numbers would look good is they quit counting all the people out there who have been long-term looking for employment. They just don't count them. And by doing these two things, creating all these new part-time jobs, these new crappy jobs, let's call them crappy jobs, jobs that don't pay much, right? And also not counting the people who are unemployed and looking for work, they were able to fudge. It's basically a way of fudging these jobs numbers to make these jobs numbers look an awful lot better than what they actually are in the general economy. Another thing that supports the economy and makes the economy look great is they always point toward the stock market. But you can't really count the stock market the way it is right now. It's all a whole bunch of big lump of corporate buybacks and it's been pumped up with cheap, easy money, and it's overextended. It's a bubble. So what else have they got out there to say we got such a great economy? Well, I'm going to give you guys my viewpoint on it all. I think our economy in the United States of America, and here in Canada too, is probably the strongest of the economies out there in the world right now. And the rest of the world is slumping down real fast. And you say, well, what about the Chinese economy? Believe me, the Chinese economy, their numbers are you think our numbers are fudged bad? Their numbers are fudged bad, and I've been hearing rumors through the grapevine, that they're even going to have to knock their numbers down to like a 3% growth, which means that they'll be negative. Because they're already fudging their number by probably 4 or 5 points, and they're saying they have 6% growth. So they really probably right now only got about 2% growth in reality. Now, if they cut that number in half to 3%, means they'll really be negative. So in other words, China will be in a recession. And that is not unexpected at all by me. Because the way the Chinese economy is going right now, I can see them really going into a recession if they're not in a recession already. And that's going to have a profound effect upon the world economy. Now, there's another thing I want to point out. I'm going to start the charts right here and show it to you. This was a big tell for me. A big tell. 1 trillion oversubscribed for $7 billion worth of Chinese bonds that went up for sale. These investors out there are really hunting for yield, and this is why they oversubscribed by 1 trillion. This gives me an idea of just how much liquidity is out there floating around in the system right now. How much excess liquidity. So this is a tell for me. It doesn't mean a lot. This story doesn't mean a lot for an awful lot of other people out there, it's not real important, but for me, this is important. It gives me a little bit of an idea that there's still a lot of excess liquidity floating around in the system. So what's the reason why, if there's all this excess liquidity floating around out there in the system and chasing yield, what's the reason why the Fed has been in the repo market dumping so much more liquidity into the system? You know, what they're doing is, it's what they call a liquidity trap. The banking system right now is basically siphoning off this money, slamming it where they want to slam it, and it disappears. But it's still there. Still there. It's just it seemingly disappears. And they're basically screaming for money when probably they're just pilfering it, you know, and they're getting it. They're getting it, you know. And this is the same trick they've been pulling. They've been pulling this trick for years. 2008, they did all kinds of this. They got away with it. And they had a lot more money that was... This is creating general in a liquidity trap. At this point, it doesn't matter how much money the Fed pumps in there. That money's getting trapped in the system, and it's making certain people within the system ultra, ultra, ultra rich, while poverty is extending itself out over the rest of the system. It's totally an unfair system we got right now. And this is one of the reasons why this system is on the verge of going down. It's going to go down hard. What I'm worried about is a hard landing with the whole system. And the longer they're able to push all this off into the future, the harder our landing's going to be. It's actually getting to the point where they've pushed it off so long now that the landing could be actually frightening, very frightening, you know? Seriously, guys. I mean, the system is so over-leveraged that it's getting to the point, and the further they go, the worse it's going to get. It's getting worse every single month. Let's take a look at the gold price today. $14.62. It's up $6.50. Well, that's good, you know. But I notice in these charts, I notice that there's certain periods and times of the day it follows certain patterns. And if you take a look at it right now, it's getting ready to do this same pattern it's done for the last 2 days, where it takes a little dip and then it rebounds back. You know, you can see it's right on the verge of that pattern. So $14.62, up $6.50. Let's take a look at silver. Silver is up 9 cents. And it follows the exact same pattern. You know, gold and silver, they follow each other. This is why they're called gold and silver. Gold and silver, you know? It's almost like they're a married couple, you know, but they follow each other. This is what happens with gold and silver. You know, they say silver has all this extreme volatility. Where? I don't see it. I don't see extreme volatility in silver. You see extreme volatility in things like cryptocurrencies, but not in gold and silver. You know, they're not the extreme volatility. Let's take a look at cryptocurrency markets today. And, you know, cryptocurrency is hanging on real good right now. It could all of a sudden start to catch a bid. Got to keep our eye on it, because when crypto goes along like it's been going along, that's the point where it could very well catch a bid. So I wouldn't be a bit surprised to see a sudden rise in cryptocurrency price. But the coins are doing really good right now. $87.95 for Bitcoin. XRP is 27 cents. Ethereum is 187. Bitcoin Cash is 287. Litecoin is 61.30. And I'm not going to go down any further on the coins today. Now, what I want to talk about is the Dow Jones Industrial Average today. I'm looking at 27,000. Just a sec, let me get the page refreshed, because it should be started. Yeah, okay, we're down 29 points. 27,663. And being as there is excess liquidity out there, we could actually see this market continue to melt up. Beware. This market could suddenly change and not become a Teflon market anymore. On our horizon, and not too far out in our future, I'm expecting a really large downturn in this market, a scary downturn in this market. They're trying to hold it all together, and that effect of them trying to hold it all together is keeping this market buoyed. But this market is completely and utterly dependent on what the Fed does now at this point. And in a world that's considered to be running along good, the Fed can't take substantial actions to support the market, so they're kind of being coy about it. The market could take a downturn and force their hand into extending massive injections of money into the system, in the not too distant future too. That's what I'm really expecting to happen. Let's take a look now at oil prices. $56.44, down 36 cents on the day, 0.63%. Now, U.S. Treasuries today. We're looking at yields falling. Perhaps some of that excess liquidity that's in the system that was chasing those Chinese bonds. $1 trillion. Can you imagine? Okay, it says here, breaking news. Fed's Powell says interest rates unlikely to change as long as growth continues. See, that's what I mean. It's exactly what I've been saying. The Fed is, because of the jobs numbers and the way the market is right now, they're not in the mood to really start pushing the big liquidity into the market or change interest rates. This is going to get forced. This issue is going to get forced in the not too distant future. The Fed is going to have to lower interest rates, and they're going to have to go down to zero because everything's going to start to roll over. We're in a little calm just before the storm's getting ready to start, guys. Let's take a look now at the U.S. dollar index. And we're looking at 98.37 on the U.S. dollar index. Dollar's riding high, riding strong. I'll tell you about the dollar. It's going to ride high and it's going to ride strong until it doesn't. It's one of those things. It works until it doesn't work. It's going to be a quick demise because what's happened is the moorings underneath the dollar. Everything that supports the dollar, the petrodollar, it's not being used for petrodollar anymore. The countries are switching off. They're pulling away. They're pulling away their support of the dollar. And, the dollar has been riding high because it's the best horse at the glue factory, But all of a sudden, a point's going to come in this system where the dollar, when it's going to go up and up and up and up until it just dies. It's basically what it's going to do. And everybody's going to run into the dollar, and then they're all going to try to run out of the dollar, It's going to be a sudden thing. But listen, thank you guys for listening to my show. Give me a thumbs up, and you guys have a great rest of the day. Bye-bye.